Good afternoon, everyone. Last panel for the day. The panel discussion for this one is KYC using the latest technologies for onboarding, verification, and monitoring. Before we start, I'm going to ask all the panelists to introduce themselves. I'll start myself. My name is Christoph from Aqubix. Thank you. Cheers. We focus on creating solutions that automate the operational side of compliance. Vasco?
Hello. I'm Vasco de Freitas. I'm co-founder and head of customer engagement at Electronic ID, and we provide what is known as e-trust services, from identification services, from authentication and electronic signature services.
Good afternoon. My name is Simon Winchester, and I head up sales at Jumio for EMEA. I'm responsible for our direct and indirect channels, so our new business sales team, but also our partner ecosystem. At Jumio, we're an AI-powered identity as a service provider, so we verify the real-world identity of consumers across digital channels.
Carmine Auletta, InfoCert. We are a certification authority and a qualified trust service provider under eIDAS. We manage something like millions of transactions per day, and that makes of us the largest certification authority in Europe. Basically, what we do, we support our customers in their digital transformation journey, leveraging our compliance expertise, digital trust solutions, and the qualified trust service provider status to add legal value to any digital transaction.
Hi everybody, I'm Ted Datter. I'm head of risk and compliance solutions business for Bureau van Dijk. You may know us, we're a data company, and we help people with the challenge of unraveling global corporate structures to identify beneficial ownership as part of the KYC AML process.
Thank you, guys. A very short, quick preamble to the discussion that we're going to have. Some basic statistics, very recent. The cost of non-compliance. And I'm going to relate this to the panel that we're going to be discussing. So one of the statistics we found out is that the cost of fines, bills, compensation at the moment, only in UK, is estimated at £19.5 billion. The cost of actually conducting compliance, both from the onboarding side, verification and ongoing, is actually in UK only estimated somewhere between 10 billion and 20 billion costing the economy. When we had the discussion between us, we started raising between us all the benefits that our technologies, our processes, because there's a mixture of processes and technologies on the panel, can help in this. And we can help in many ways that we're going to discuss. However, the picture that we wanted to share with you guys, maybe IT can load it. We'll refer to it later because it's not working. It's the problem of Regtech on the market, whereby we offer solutions and processes that can help and offer benefits, yet the uptake, the sales cycle of such solutions is slow. The first question that we wanted to cater with you for today is, what are the cost benefits of adopting new KYC technologies and processes? Is it only cost? What else is there behind this? Vasco?
Well, there is a first side, which is the customer, the end customer side, and facilitating the way that a customer onboard for whatever service, for opening a bank account, for whatever financial service, is key, and that's one of the things that we can help up. It's making it easier so you can. When I say you, I say the bank or whatever financial institution, you don't lose your customer just because your process, which is a bureaucratic process in order to be compliant, is complex, so you end up losing your customer. So one thing is how quick and easy it is for your end user to finish. And for the other side is how easy it is to get that information, which is the regulatory information that is required by the regulator, from our customer from a system point of view. So facilitating those sides.
Yeah. So technological perspective, yes, I think institutions understand that. From a process perspective, Carmen, I think all three of you have processes in place, Carmen, Ted and Simon. How do processes help in reducing costs, improving processes, losing less customers in the process of onboarding? Simon?
Well, I was going to say that there's a number of ways that you can answer this question. And one of the ways I thought would be for the businesses, rather than to ask themselves the cost of these technologies, is the cost of, as you say, non-compliance, the cost of fraud to the business, or the cost of non-compliance to KYC or AML regulations, or thirdly, the cost of an inefficient KYC process. And I think, well, if I quickly address that, on the fraud side, every other day we seem to be reading headlines or seeing in the papers, on the news, a new breach or a hack or a leak of data. Some of the big ones in the last few years we all know about would be the likes of the Aqubix, or a little bit older, the Yahoo breaches, which resulted in hundreds of millions of consumers' data vanishing or leaking. And some of the costs associated to that, I mean, Yahoo alone were fined 35 million for not being forthcoming about the breach. And I think that later resulted or contributed to a $250 or $350 million devaluation in the acquisition that followed. So the cost of fraud is obviously extremely high. On the data, the cost to not being compliant to regulations, you don't have to look very far to see that things like GDPR around the corner, and numbers like fines such as 10 million or 20 million can have a huge impact on any business. And then finally, the third part about inefficient KYC processes, I read a report recently from Consult Hyperion, and it was talking about UK banks losing 5 to 10 million per year due to kind of inefficient internal manual approach. So I think if you start asking those questions and start answering those questions, you very quickly start building a business case for why engaging with any of the excellent Regtech vendors at this conference today can help you build a robust and successful KYC process and reduce costs.
You mentioned processes. How can we, as Regtech companies, from a process or technological perspective, assist with inefficient internal KYC process? How does that happen? Carmine, you want to maybe?
I'd like to answer the previous question because I have a specific figures for that. We are helping with more than 50 financial institutions all around Europe for their onboarding process. And we asked Forrester Research to measure the real benefits they are getting. So the process worked like that. We had to give Forrester a number of 3 clients. They just picked one and they interviewed the clients. And the figures are staggering. The return on investment they measured is a 3-digit. The reduction in fraud is 80%. And the customer conversion rate increased by 30%. So that's a clear number. Now, without considering all the unquantifiable benefits, like the risk of getting hacked and things like that. So those are staggering figures that makes the business case straightforward for whoever is considering adopting a Regtech solution.
Yeah, I think historically it was all about managing risk. I think at the moment it's about managing cost. So historically, fines, regulatory pressure. I think the market's reached a tipping point where actually it's about managing cost. And that means either investing in people or data and technology.
And within this process of managing costs, last time when we had the discussion in advance of this happening is, there's the image, I'll get to that later, is an outsourcing aspect. And there are some of you as service providers who actually outsource the service to you to take on board a better framework, a more secure framework. How do clients react to that? When you're letting go of, as an institution, you're letting go of your data to give it to someone else, the process. How do you make sure that you give the client the peace of mind that as a process, it's safe, especially with GDPR coming in so close.
I'm trying to answer to that. It's easier for me because being a qualified trustworthy service provider under eIDAS means that we are strictly regulated. Exactly like banks, we are audited twice a year. And we take the full liability for what we do in terms of customer identification, assesses willingness to enter in any digital transaction, and so on. So in our case, it's like no other way we can do it. So the banks rely on us on outsourcing the identification process and the full liability associated with that. That makes it much more easier, even from a bank perspective, because it will put on us all the liability that will come from GDPR, for example.
Yeah, I think Carmine makes a valid point about providing customers with the confidence that you can represent their brand and you can protect their consumers and be compliant. So I think compliance is definitely one of the words of the year. And I'm sure we're going to be talking about it a lot more. But in terms of businesses outsourcing or building internally, I think in this day and age, it's pretty hard not to outsource. We live in an era of digital Darwinism where society and technology is evolving at a quicker rate than how businesses can keep up naturally. And when I talk about technology, I mean kind of the relationship of financial institutions with tech disruptors like us on this panel and others in the room. And society, I mean the relationship again with consumer behavior and how quickly that is changing to the next wave of regulations, whether it be GDPR or whatever's next, to even the new fashionable way of cyber attacks. And I think it's hard enough for businesses like ourselves, Regtechs like ourselves, to continue to innovate and continue to keep up with that change, let alone for businesses, financial institutions whose primary goal is to obviously build a financial product to better service their customer base. So I think you have to start looking at outsourcing to try and adhere to those tough requests.
Yeah, and well, on top of that, I believe that businesses are more focused each day. So agreeing with what you said, the bank has to be, or the bank or the financial institution is focused on its business. So we are focused on Regtech technology. So we are good at that because we are focused on doing that. So if why is a good decision to outsource this? Because there are some other players out of my business, which is banking or financial business, that are really good at doing that. So why do I think that I can do that if that's not my business? And I believe that's the main reason.
I think it's easy for us as being technology companies and processes to say how good our services are and technologies are. However, as we know, if we can have the image that we uploaded before on screen, please. Yeah, there you go. This is, I think, the best image that represents the Regtech market, where there are companies providing the wheels, the efficiencies, the benefits, the proven statistics. However, the uptake is still slow for many reasons. Ted, what can you do to get a client to adopt your services, your technology? How do you convince them? Listen, irrespective of the complexities you have internally, irrespective of the legacy systems, how do you get a client to let go and actually choose a supplier?
Well, it's a huge question, isn't it? I think we're a bit lucky because we're discussing backstage. You've startups, we have teenagers on the panel, we have people in scale-up mode. We're probably a bit of a, grandfather of the industry, been around for a long time. Doesn't mean that things still happen slowly. They do. I think to give advice to sort of pure Regtechs out there, I think it's about thinking quite innovatively about your commercial model. So we're sponsoring the FCA's tech sprint today and tomorrow, which is the AML tech sprint. And there are a lot of smaller technology companies there looking to partner up and then deliver something greater than the sum of the parts as a solution.
I'm going to get to the aspect of the smaller institutions. However, even for example, in data provision, there are so many suppliers out there, so many claiming to do this, and that. From an institution perspective, how do they go about choosing the right one based on so many suppliers being out there?
I think it's incumbent on us as people that are sales professionals to educate around what a proof of concept is. I wouldn't always expect to be dealing with a buyer either. We talked backstage about you have this passing the responsibility in terms of legal and compliance, procurement, IT, finance, project management. We've all been passed around those endless conversations. So I think one of the things is to insist upon a project manager on the client side or the prospect side. If they haven't got one, then you need to hire one yourself and bring that onto the project. As we've been doing a lot of hiring and deliverables and bringing people on into our delivery function and then bringing that into our model and just letting them understand what a proof of concept is. We're not going to hurt you. We're not going to charge you for this element, or you might charge for certain elements, but being very mindful of what a good POC looks like, because that's key for both sides. And if you are smaller, then you learn a lot from that proof of concept. Perhaps that becomes a 6-month engagement. That becomes your first or second or third client, and that builds up your archive and your case studies. So I'm sure the other guys have thoughts on that. But,
in fact, I would like to have your thoughts on this. I mean, one of the biggest challenges, in fact, we discussed this with amongst each other, is from an institution side point of view, when you approach them with new technology, new services, there is no clear understanding of who's wearing the hat of the decision maker within the bank, within the institution. Sometimes you start from compliance, it moves to head of operations, it moves to chief operations. If you start the other way around, they still want to go down to compliance to make sure that the system is correct. Have you experienced this across your services? Does it slow down the process?
That is the problem, actually, because for the kind of service that we sell, it requires multiple skills. You need to know about compliance, you need to know about technology, you need to know about regulation, laws, business, and that makes it so challenging. In my experience, the process becomes much easier and faster for smaller players, not for smaller banks, because everything is getting closer. For large institutions, the suggestion I would like to give the audience, or the Regtech in the audience, is to start small, start maybe from a smaller branch in a smaller country to prove what you can offer, and that will make it easier to scale up to the headquarter level.
Yeah, I mean, I think we're all in agreement that POCs and things like that are exactly what is needed to push through a process as quickly as possible, which can sound contradictory. But if customers want to see the proof in the pudding, so you can be a startup, or you could be a well-established company with a great brand and great referencing. That helps, but ultimately the proof is in the pudding. So you need to see that the solution holds up to what the sales teams or to what the business is claiming is possible. So I would 100% agree with everybody else where they're saying that POCs are important. I also agree that if you don't have a well-structured process, and that is on both sides, if the Regtech isn't making sure that they're building up the relationships with the right people and having the right conversations with the right teams and not being passed around from division to division because no one has ownership, then that's not going to go anywhere. And likewise, on the business side, if there's no stakeholders engagement, if there's no official owner of the process, then clearly things aren't going to move anywhere particularly quickly. So it's common sense in my mind.
I just wanted to add that we have experienced that, and when you have a really new service, so everyone is asking, is this legal? And you might say, well, this is quite new, I don't know. But then you start showing this to the customers, to the regulator, and you start, gaining some confidence, some trust on them on this service, and then. Something that had helped us is that some new player, maybe a fintech company that is like entering the business life of a traditional banking, start doing things. and they are, and we know them, they are not completely sure that what they are doing is legal, but they are just, making that bridge. And when that happens and they start having new customers and developing a new business, so the bigger companies start saying, okay, let's try because this guy is gonna, eat my food.
In fact, on what you just said, I think, Carmen, you had raised the point when we had the discussion that clients in Eastern Europe tend to adopt technologies and process faster than Western European institutions. Why do you think that is the case?
That's what we experienced in the past couple of years. Now, we've been traditionally an Italian company. Thanks to EIDAS, we were able to sell internationally since July 16, and we went now all over Europe, pretty much. We've been very fast the sales cycle in Eastern Europe because of the size, because of they're hungry for innovation, much more than Western, let me say, counterparts. We've been talking with some Western country banks, financial institutions, that it took us 18 months to get to the POC level. I mean, that's the kind of, on the other side, in 6 months we were live. So this is what's happening. It depends on the dynamics on the markets. And these days, East European markets are growing much faster.
Simon, do you have a view on that from Jumio's perspective?
Yes, I would agree and disagree respectfully. I certainly see a huge amount of innovation and fast-paced movement out of Eastern Europe, and we're seeing great things from a Jumio perspective there. But again, we're seeing similar things on a global scale. So it's hard to say specifically that Eastern Europe is quicker than, say, continental Europe or the UK or even the US. What I would say is that, there's 100% niche markets that are much harder to work with, and typically due to regulation are a lot slower to take up new technologies, or B, to process through something like a digital transformation project. But I would also agree, and I think it was, I can't remember who mentioned the comment, but operating with businesses at different scale has a huge effect. If you're working with, just finish that, if you're working with one of the biggest banks in the world, then naturally there's going to be multiple touch points and many different approvals and policies that you'd have to adhere to get something signed off and delivered. A new digital bank coming out of Poland might be a lot easier because they're arguably more forward-thinking, have less red tape, and capable of making decisions quicker.
Yeah, I would wholly agree. It's more the size of the institution, but you do have this concept in other industries of leapfrogging, where in certain less regulated or more developing countries, they can borrow technology that wasn't available 25 years ago that all the banks used and have created legacy systems. So yes, perhaps in Eastern Europe, where you've got emerging institutions that are more ready to adopt technology out of the box that large institutions can't, and I would say there's probably some truth in that, but I wouldn't say it would be a stereotypical approach. It's probably more of an institutional approach.
Yeah, what I can add also that made me think about it is that we have found also regulators in East European countries willing to meet us, to learn more about the technology, to learn how the system could be improved. No, so that's never happened in larger country. Let's say that way. That it made life much easier.
I've got to challenge that because the FCA are doing the Regtech sprint today. So there is an emergence of view around the regulators putting their arms around some of these technologies, and we discussed before about the extent to that, how far that goes in terms of certification programs. I know in the US there's talks around fintech certification programs, because ultimately when it comes to auditing an organization, what are you actually auditing? If ultimately it's a robotic process using a piece of third-party software, who are you responsible, and where does that stop? That's a separate conversation. But I would say that the UK is probably more innovative than perhaps other markets, and certainly the FCA have taken the lead in that.
In fact, that was our next question. So our next question, you ruined it for me. I'm joking. What can KYC Regtech companies do to differentiate themselves and to speed up the sales cycle? And what I challenged each individual on the panel is on one aspect, which is the involvement of regulators. And we discussed the idea of how nice it would be if regulators actually involve themselves in auditing certain processes and giving the seal of approval to certain technologies. And it would make the remit of both the Regtech providers much faster, because they would sell much faster because they have the seal approval. For institutions, it would be easier, because they know they're buying a system which has been approved by the regulators. And in my thought process, it makes the life of the regulator easier, because rather than relying on audits manual, they are actually auditing technologies. And this raised a lot of eyebrows and discussions. Ted, as rightly so mentioned, the UK, I think, with the tech sprints, with the sandpit that they're creating, are starting that process. We're also seeing some regulators, Germany and Spain, that allow in the AML4 directive for specific technologies that are recommended by clients. Does this approach that regulators might eventually get to auditing solutions, auditing processes, is it possible? Will we get there? Will it help? Vasco.
Well, yes, in the case of Spain, in fact, it happened, and well, the first move was made by BaFin in Germany, accepting for example, the video identification as a proper identification technology. And what we did, some of the things that we did in Spain, we were showing the technology to the regulator. I mean, we had the customers that were really keen to use the technology, but that always the fact that they were asking like, okay, but the regulator really accepts this. So the move was, okay, let's go together and see the regulator in order for the regulator to see the technology, that our customer, the banks, are willing to use it. So yes, I mean, we kind of push the regulator to say something about that so they can start using it, and that fosters the adoption of the technology.
Simon, would we ever see a situation where regulators will actually agree cross-jurisdiction on technologies, on processes?
From a regulatory perspective, approval perspective, I think that you certainly see different regulators adhering or replicating aspects of other regulators throughout. Let's take Europe, for example. But so I can certainly see that continuing, and they're becoming almost more of a holistic approach with some nuances. We'll see. But I think that we're already seeing that regulators are becoming more granular in their kind of definition of what is and what is not appropriate. And I think that is almost a necessity to continue. Leaving things open-ended, not giving the appropriate detail, just leaves confusion and ambiguity. So providing that granular level of regulation is a great thing.
I think the difference is between a formal certification and an informal recommendation. There's a big difference, and we've had experience of clients who've had audits, had HMRC, FCA in-house, and say you're using the wrong tool for the wrong purpose. Now that's never going to hit hard copy or what have you, but I agree with Simon, they are becoming a little bit more. There's definitely more specificity and that level. I think we are partly on that journey. I think you want to look at other industries and take analogies from things like the automotive industry, health and safety. Where does that go to regulators looking at technology and you adopting it? Airline industry, safety standards, because this is where compliance. The challenge is that this is a business critical process and this onboarding process, and if you get this wrong, that's why the issues here for some of the smaller players. But I would certainly see that as that we're on that first step of maybe the next 10 years of that evolution.
We have to close off with one last question because we were told to finish at 5:15. One last question to help the audience. If I had to ask you individually, who, based on your past experience, is the stakeholder within an institution to sign off on your process, on your service? Who would it be? Ted? One role. Not a mixture of.
I guess, look, you're probably thinking of left field. It's probably the customer of the client. if you think about what proof of concept is, it's giving real-world access to the tools, letting them use it, and if the customer adopts it, they're the ultimate stakeholder, right?
But within the customer, which role would sign it off?
You want a more specific answer?
Yes, a role. And the reason why I'm asking this, because I want to the audience to understand that part of the challenge that we face as processes and technology providers is identifying the role of who actually signs off such processes.
It's how much money you're asking for is the differential. So that's the reality of it. It's go up to the to C-level or what have you. But look, I think a lot of compliance professionals that we work with are much more operational. They're much more into process. So it's certainly Chief Compliance Officer, MLRO, GC. Yeah, that's where it tends to sit.
Carmen?
I will disagree. In our experience, banks don't do this for compliance reasons. They do it for being more effective on the market. So it's the business. And then they need to buy the buy-in from the compliance, from the legal, and everyone else. That's our experience.
Yeah, I mean, I don't think there's a right answer here. It's impossible because it depends on what size of customer, what size of project, budget, all the rest of it. So I don't think anyone's going to give an answer that everyone else agrees to. But I would say that we spend a lot of time getting eventual sign-off from the likes of the COO.
Pascal?
Well, I mean, each customer is a different story, but if I had to choose someone, it should be someone in operations or business, the one that is, the one with the pain in the revenues is going to push the other ones. It's going to push the compliance, it's going to push the ones that are afraid to adopt a new technology because they need to improve the business.
Guys, thank you very much. Thank you to the panelists. Thanks everyone for paying attention and have a good day. Thank you.